Moody's, which has projected India's economy to expand to 6.1% in 2024. Now, Moody's said that the output in India remains 4% lower than what it would have without the COVID pandemic and its various aftershocks, from supply chain snags to military conflicts abroad. Further, economies in South as well as Southeast Asia will see some of the strongest output gains this year. The region overall is doing, in fact, better than many parts of the world. This comes literally hours after Asian Development Bank also raised India's GDP growth forecast for the current fiscal to 7% from 6.7% earlier. Now, ADB says that robust growth will be driven by public as well as private sector investment demand and gradual improvement in consumer demand. Overall growth outlook looking for very bright, at least for India and Southeast Asia. I want to come to you first, Krishna. This is, of course, a trend line that we're looking at on our screens at this point in time, from RBI to Moody's as of this morning, suggesting that the growth could be in the range of 6 to 7%. The commentary is in fact more interesting that Asia, Southeast Asia and India, of all the countries in Southeast Asia, remain a beacon of hope.
Right, and they have been a beacon of hope for through all the doom and gloom in Western economies, be it Europe or the US. So in a sense, it's a continuation of a trend that we've seen all this while. Let's never forget that no matter what numbers come through, India will continue to remain the fastest growing major economy in the world, and that trend is set to continue. My only concern when we are looking at those numbers is that what's going to happen to the final revised growth figures for FY24, how different it is from the projections and what it will mean. Is it going to be 7? Is it going to be 7.4? So because, you know, we've seen that those numbers, in fact, the last quarter GDP numbers beat everybody's expectations and come in about 8% for India. So, you know, how will that impact the final growth figures for FY24 is something that I'm keen to watch out for. And based on that, how projections for FY25 will change.
Absolutely. And I think, Kartik, we can't have this conversation without discussing what would be impediments to that growth figure, whether it's going to be 6 or 7, although it's 100 basis points, large difference between the two numbers. But apart from the numbers, the commentary that has been coming in, some of the largest conflicts that have erupted in the world in the past 2 years could be impediments to the growth, not just in the world, but specifically in developing countries like India.
Right. So I think, you know, none of these reports or none of these forecasts come without risks to the outlook. So the risks to the outlook are many. Number one, of course, being weather. I think if climate change hits India, see, even if you remember what Shaktikanta Das, RBI governor, mentioned in the last MPC meeting earlier this month, he also said that the 7% projection that we are looking at is provided the monsoon
favorable
remains
monsoon.
normal. Right.
Absolutely.
Now, the reports which are coming in right now don't suggest an adverse climatic situation. Of course, there are going to be much larger number of hotter days than previous years. But as far as monsoon goes, no real surprises likely to spring up with the projections just as yet. Right. So this is one part of the story. Monsoon is something which is going to impact domestic consumption. Right. It is going to impact inflation. Inflation is going to impact rates. Inflation is also going to impact consumption. So that is the domestic risk that India is confounded with. The second risk is what's going to happen globally. And there are multiple risks over there, but I think the most critical risk to India's growth is going to be the oil prices. So if crude prices continue to inch up like we've seen over the past month or so, it's already bordering our tolerance zone. So at about $90 a barrel, we are just about $5 short of the maximum threshold of comfort at about 95. Anything below 100 we can still live with. If it moves beyond 100, then we are looking at again a full plethora of troubles opening up for India. And then, of course, what happens in the rest of the world? What happens to the, to the rates in the US? Because that, to some level, is going to dictate how the services sector in India performs. Now, rates in the US, at some level, are also again linked with how is oil going to play out.
Right.
So I think we live in a fairly complex world, interconnected world. So none of these projections are without risks.
Absolutely.
However, I think the bigger quarrel is that you have a very moderate 6.1% growth coming in, projection coming in from Moody's, which seems to be for the calendar year, not for the financial year, and a much higher, almost a 90 basis points higher growth coming in from RBI and from Asian Development Bank at 7%. And if you look at the track record, something Krishna also just mentioned, over the last couple of quarters, we have grown in excess of 8%. So how do you justify the fact that if you grew in Q3 at 8.4%, then your aggregated growth for the whole calendar year, starting immediately a month after that December Q3 quarter ended, is going to be 6.1%. So, you know, I think there is a lot of divergence in how this data is projected and what are the kind of forecasting mechanisms and inputs taken into account.
In fact, that has been one of the quarrels that India has had. Many economists have had with these global rating agencies. We've also discussed it extensively here on Newsline as to how some of the growth figures don't really take into account phenomena that are currently happening in the country. They're not holistic in their approach and perhaps not inclusive enough to factor in some of India's growth parameters. And you know, those could be a variety of growth parameters. But at this point, it does look like many of these ratings agencies are underestimating India's growth.
So I think I'll give you an example of Fitch, and this is a report that came about 2 days back, right? What has Fitch done? Fitch has moved China's sovereign credit rating from neutral to negative, right? However, it has kept the broad base of the ratings at A+ intact. The same Fitch is actually going overweight on India, but keeps India's credit sovereign rating at BBB negative. So, you know, you're going short on a country which is degrowing or not growing fast enough, happens to be in the neighborhood of India, and you want to go from neutral to negative on your outlook, but you want to keep the sovereign rating you know, higher than India, and here you're going overweight on
Which
India.
determines their ability to raise capital.
That's right. So China's ability to raise capital and ability to repay that debt seems to be higher than India's, while China is the one which is borrowing more from outside and is investing that money in its own infrastructure development, right? And India, on the other hand, by the same agency, Fitch, India has moved from neutral to positive, which means Fitch expects India to continue growing and continue doing better, but our sovereign credit ratings are lower than China. So how do you explain this? Look at the divergence between, let's say, the Nifty 50 over the last 1 year and China's Shanghai Composite. You've seen pretty much, you know, a full acute angle triangle being formed on the map, where India is going north and China's growth is going south. And you see from
the divergence is huge.
Divergence is only growing. So, you know, how do you justify this as credit rating agencies and as multilateral development banks both?
You know, before I close this, what is an average Indian got to take away from these numbers? These numbers, as complex as they are, and now that we have also jotted down as to the possible parameters that could prohibit India's growth trajectory, that could perhaps come as a shock to that expected growth rate of 7% in financial year 25. What should an average Indian take away from this? Is India doing better than what it was earlier?
No, most certainly. The average Indian needs to look at all these numbers and go, numbers come and go, but the long term, the medium term, and the long-term story for India remains exactly what it was, which is that, you know, if there's an economy that's going to grow and grow faster than any of the bigger economies in the world, it's going to be India. There is possibilities of lesser than expected growth in one quarter or the other quarter, and of course the fact that, you know, global headwinds, you know, are posing risks to India's growth. But look at the way Indian stock markets are behaving. For example, Indian stock markets are ignoring everything that's happening on Wall Street. It's ignoring the Middle East tensions. It's ignoring the high crude prices. It's on its own tangent altogether, on a huge bull run. So same way, Indian economy can shake off all those you know, possible fears that might come from all that's going on around the world. That's kind of resilience that the Indian economy has shown right through the pandemic and in the post-pandemic recovery phase as well. So as far as the average Indian is concerned, he's got to continue doing what he or she is doing and continue having the faith in India's economy.
All right, continue having faith in India's economy. Remember, the numbers on your screen suggest a picture, and rather rosier picture, come to think of it, projecting India's growth rate from 7% projected by RBI to Moody's 6.1%. India could grow anywhere between it or more than 7% projected by RBI. Numbers will tell a different tale, but in a couple of months from now, perhaps.